Good day, everyone. I am Andrea Gail Sorrosa from BS Accountancy 3, and my research is entitled Assessment on Financial Performance of Arrowroot Cookies Manufacturing Businesses in Marinduque, Basis for Operational Efficiency. And today I am going to discuss the findings and recommendations of my research. Statement of the problem number 1. What is the financial performance of Arrowroot Cookies manufacturing businesses in Marinduque in terms of profitability? In measuring the business profitability, the net profit margin, return on asset, and return on equity are used. These ratios are indications of the Arrowroot Cookies manufacturing business's financial performance. Their profitability was assessed and compared based on their operations for years 2018, 2019, and 2020. Using the net profit margin, it indicates that Arrowroot Cookies manufacturing business B, C, and D have been able to keep profit from every peso of their sales, while Arrowroot Cookies manufacturing business A did not. This may seem that Arrowroot Cookies manufacturing business A had been spending more money than they are making, which is not a sustainable business model. Arrowroot Cookies manufacturing business C has the highest margin reached at 57% during 2020, while Arrowroot Cookies manufacturing business A has the lowest at negative 485% during 2020. Referring to the return on asset, Arrowroot Cookies manufacturing business B, C, and D have positive returns, while Arrowroot Cookies manufacturing business A has negative. Arrowroot Cookies manufacturing business C has the highest reach at 116% during 2018, while Arrowroot Cookies manufacturing business A has the lowest at negative 30% during 2020. However, according to the Carbon Collective Corporation 2021, return on asset of below 5% shows that the company is not experiencing growth. Above that number, the company is likely doing a good job of utilizing their assets properly to create growth. Therefore, most of the Arrowroot Cookies manufacturing businesses are showing a good indication of growth. For return on equity, Arrowroot Cookies manufacturing business B, C, and D have positive returns, while Arrowroot Cookies manufacturing business A has negative. Arrowroot Cookies manufacturing business C has the highest reach at 149% during 2018, while Arrowroot Cookies manufacturing business A has the lowest at negative 8% during 2020. Arrowroot Cookies manufacturing business C had been the most efficient when it comes to utilizing their investment. Overall, Arrowroot Cookies manufacturing business B, C, and D had been profitable, while Arrowroot Cookies manufacturing business A was not for the 3 consecutive years. It is then recommended that they manage their operating costs, increase their production, and invest in other revenue-generating activities. In terms of liquidity ratios are used to assess companies' capacity to satisfy current obligations. The current ratio and quick ratio were utilized to gauge liquidity in this study. For current ratio, Arrowroot Cookies manufacturing business D has the highest reach at 80.56 during 2020, while Arrowroot Cookies manufacturing business A has the lowest at 1.51 during 2018. This indicates that Arrowroot Cookies manufacturing business A, B, C, and D have enough current assets to cover their current liabilities. For quick ratio, Arrowroot Cookies manufacturing business D has the highest reach at 79.96 during 2018, while Arrowroot Cookies manufacturing business A has the lowest at 1.50 during 2018. This means that Arrowroot Cookies manufacturing business A, B, C, and D have enough current liquid assets excluding inventories to cover their current liabilities. Overall, Arrowroot Cookies manufacturing business A, B, C, and D having good liquidity ratios are more likely to pay its short-term obligations. However, it is Arrowroot Cookies manufacturing business A that has the best liquidity, as healthy current ratio normally varies between 1.5 and 3, and the quick ratio of 1 is an acceptable basis for liquidity. Although Arrowroot Cookies manufacturing business B, C, and D are technically deemed liquid because their current ratios are greater than 1.5 and their quick ratios are greater than 1, their highly excessive ratio doesn't necessarily mean that they are having a good investment. It could mean that they have problems managing its capital allocation effectively. In terms of solvency ratios measure the company's ability to cover its short-term and long-term obligations. To measure the Arrowroot Cookies manufacturing business's solvency, debt-to-asset ratio and debt-to-equity ratios were used. For debt-to-asset ratio, Arrowroot Cookies manufacturing business B has the lowest at 0.004 during 2018, while Arrowroot Cookies Manufacturing Business D has the highest ratio at 0.214 during 2018. For debt to equity, Arrowroot Cookies Manufacturing Business B has the lowest at 0.004 during 2018, while Arrowroot Cookies Manufacturing Business D has the highest ratio at 0.316 during 2018. Generally, solvency ratios of less than 20% or 30% are considered financially healthy. Lower ratio is considered to be a good indicator of the ability to repay debts or take on additional debt to support new opportunities. A high ratio indicates a substantial dependence on debt and could be a sign of financial weakness. Therefore, Arrowroot Cookies Manufacturing Business A, B, and C have good solvency ratios indicating their ability to repay debts, take on additional debt, and are operating mainly through equity financing, while Arrowroot Cookies Manufacturing Business D made an extensive dependence on debt. To improve their liquidity and solvency, they are recommended to apply for small business loans and improve their collections of receivables. Statement of the problem number 2. What are the challenges encountered by Arrowroot Cookies Manufacturing businesses in Marinduque on financial management? The challenges encountered by Arrowroot Cookies Manufacturing businesses in terms of obtaining funds for the business includes the difficulties on applying for financial grant or loans, fear of taking on loan, and problem on generating income. In terms of managing working capital, challenges encountered includes the lack on keeping good recording of transactions, lack of planning for inventory management, difficulties in collecting receivables, changes in the prices of raw materials needed for production, difficulties in managing salaries of staffs, the need for maintenance of equipment, and allocation for other business activities such as in promotion of its corporate social responsibilities. In terms of allocating funds to long-term investments, the businesses didn't have any long-term investment, the necessity for seeking professional advice which can be costly, the business focus on the main source of income which is manufacturing and the reliance on the level of income generated by the business limits the Arrowroot Cookies manufacturing businesses to make such investments. The other challenges encountered by Arrowroot Cookies manufacturing businesses regarding financial management includes the poor marketing, poor cash flow management, lack of knowledge on financial data analysis, lack of preparation for unforeseen expenses, and the need for employee trainings. Seeking for advice from financial and management experts and engaging in financial management trainings or seminars are therefore recommended. Statement of the problem number 3. What activities to improve operational efficiency can be proposed? There is a need for improvement regarding the financial management of Arrowroot Cookies manufacturing businesses to improve their profitability, liquidity, and solvency. The researcher recommends that the owners or managers of the Arrowroot Cookies manufacturing businesses undergo a financial management training. The training shall include topics about setting objectives, importance and practices or strategies in financial management that can help them assess their strengths and weaknesses to improve their financial performance. Based on the result of the Arrowroot Cookies manufacturing business's financial ratios, overall, Arrowroot Cookies manufacturing business C is the most profitable, Arrowroot Cookies manufacturing business D is the most liquid, and Arrowroot Cookies manufacturing business B is the most solvent. Arrowroot Cookies manufacturing business A is the least profitable and least liquid, while Arrowroot Cookies manufacturing business D is the least solvent. Furthermore, specific conclusions were reached in terms of the following. Profitability. Arrowroot Cookies manufacturing business B, C, and D have been profitable during 2018, 2019, and 2020. They have obtained positive net profit margin, return on assets, and return on equity. This indicates that they were able to efficiently use their assets and equity to make profits. Arrowroot Cookies manufacturing business A had not been profitable in those periods, obtaining negative ratios. To improve profitability, they have to exert more effort to make their business operations more productive and efficient. In terms of liquidity, technically, all the Arrowroot Cookies manufacturing businesses are considered liquid, which means that they have the capability of meeting their short-term obligations when they become due. However, it is Arrowroot Cookies manufacturing business A that has the best liquidity. as a healthy current ratio normally varies between 1.5 and 3, and a quick ratio of 1 is an acceptable basis for liquidity. Arrowroot cookies manufacturing business B, C, and D having highly excessive ratio could mean that they have problems in managing their capital allocation effectively. Such problems includes the difficulties in collecting receivables, changes in the prices of raw materials needed for production, difficulties in managing salaries of staffs, high maintenance costs, and allocation for corporate social responsibilities expenditures. In terms of solvency, all of the Arrowroot cookies manufacturing businesses are solvent. This implies that they have the ability to repay debts, take on additional debt, and are operating mainly through equity financing. Financial management challenges. Based on the data gathered from the respondents, the following challenges were concluded: lack of knowledge in financial management, lack of preparation for unforeseen expenses, difficulties in applying for financial grant or loans, difficulties in collecting receivables, difficulties in managing salaries of staffs, poor record keeping of transactions, poor inventory management, poor marketing strategy, poor cash flow management, problems on generating income, changes in the prices of raw materials needed for production, high maintenance costs, high corporate social responsibilities expenditures, and the need for employee trainings. The researcher recommends to owners or managers of the Arrowroot cookies manufacturing businesses to manage their operating costs, increase production, invest in other revenue-generating activities, apply for business loans, improve collections of receivables, seek advice from financial and management experts, and engage in financial management training or seminars. The researcher also proposes for financial management training to improve their financial performance and decision-making process. Thank you. The researcher is now ready for your comments and suggestions for the improvement of the manuscript.